Up next to speak to you on all things MIBI, we have our CEO, David Fitzgerald, followed by Aisling Connolly, Head of Finance and Risk. Over to you, David.
Thanks, Dennis. I'm also delighted to welcome you here today to this, our 6th MIBI conference, and to see so many familiar faces in the crowd. As you've heard from Dennis, we have a busy morning ahead, and we look forward to engaging with you, our members and stakeholders, on the many different areas that we at the MIBI champion. As this is a strategic update, we'll start with the big picture and then zoom in to see how these issues impact the MIBI. Beginning with the insurance reform agenda and the welcome initiatives brought in by the government to improve the personal injury environment. The MIBI strongly supports the personal injury guidelines and what they're trying to achieve in recalibrating damages for certain injury types. The MIBI will invariably accept an Injuries Resolution Board award, but where they are challenged in court, it has been challenging to successfully defend them. The good news here is our claimant acceptance rate has returned to over 50%, broadly in line with the PIG position. The Bridget Delaney Supreme Court judgment in April was welcomed in that it affirmed the legal status of the personal injury guidelines. It also provided certainty for all involved in dealing with injury claims, as the status of the guidelines is now confirmed. The recent legislative changes also remedies concerns around the constitutionality of the process to update the guidelines. We also welcome the new IRB mediation process. It's definitely something we wish to explore. We have already met with the IRB to discuss their procedures here, and we expect to commence it for motor later this year and hope that it will encourage earlier settlement of claims whilst minimising legal costs. On a related topic, I'm sure you, like me, are looking forward to hearing from Dara O'Sullivan of Lowe's on the changing legal cost landscape later this morning. There was a notable piece of work released from Mr. Justice Brian McGovern's expert group on discount rates in July. Following the review of a number of factors, including inflation-linked bond yields, they ultimately recommended no change in the discount rate set by the High Court, 1% for future care costs and 1.5% for other losses. Also, they held that plaintiffs in catastrophic injury cases should still be considered risk-averse. Both findings are in line with the Russell v. HSE judgment, and it is recommended that the discount rate should be reviewed every 3 years with a trigger mechanism for significant economic changes or court challenges. The Minister has accepted the recommendations and is working to prepare the necessary regulations to set these discount rates. Government reports are like buses. You wait ages and then two come along at once. In July, the report of the working group on the periodic payment orders indexation rate was also released. A quick reminder as to the background here. The Civil Liability Amendment Act in 2017 empowered courts to make awards of damages in catastrophic injury cases through periodic payment orders. This provided for annual adjustment of PPOs via the harmonised index of consumer prices. Unfortunately, just as PPOs were starting to be awarded in November 2019, a High Court hearing presided over by Ms. Justice Murphy highlighted that PPOs linked to HACP could result in undercompensation. The court emphasised the need for a wage-based index to ensure full compensation, and consequently, claimants have since preferred lump sum awards over PPOs. The Minister for Justice took action to address the High Court decision by introducing new legislation, replacing the relevant section of the Act and enabling the Minister to set a suitable indexation rate for PPOs. Additionally, the working group was established to advise on the appropriate indexation rate. Their recommendations were twofold. In the short term, a new combination indexation rate is to be used for PPOs, 80% of the annual rate of change of nominal hourly health earnings, or ARC, and 20% of HICP. And in the longer term, ARC is to be substituted with wage inflation figures for the health sector arising from a structure of earnings survey. This will be implemented once regular reporting on the structure of earnings survey is established by the Central Statistics Office, and this is expected to commence in 2026. The Minister has again stated that work is underway preparing the necessary regulations. So what does it mean for the MIBI? We've had a significant slowdown in our large loss settlements with these two issues in the ether. We currently have 50 large claims compared to 43 at the end of 2022. We define large claims as those with reserves in excess of 1 million euros. Now that these issues have been addressed, we hope that the greater certainty here will facilitate large loss settlements. We are also defined as a secure PPO compensator in the Civil Liability Act, and so they are an interesting option for us and for victims. We will consider the suitability of PPOs on a case-by-case basis, noting that it needs to work both for the MIBI and, most importantly, for the victim. The 6th European Union Motor Insurance Directive introduced many new requirements that the state were required to transpose into Irish legislation by the 23rd of December. Since we met at the MIBI conference last year, many of these requirements are now in place. There have been various updates to the Road Traffic Act to reflect the transposition of the directive, and these became effective on the 21st of December. Some of the key provisions here include the definition of mechanically propelled vehicle being replaced with vehicle, and an improved motor insurance policy now shall extend to the use of a vehicle that is consistent with the vehicle's function as a means of transport at the time of the accident, irrespective of the vehicle's characteristics, and irrespective of the terrain in which the motor vehicle is used, and of whether it is stationary or in motion. The minimum limit for property damage has now been increased to 1.3 million euros per accident, and there is an exemption for motorsports events and activities. Turning specifically to vehicles, from the 20th of May of this year, certain personal powered transporters, or PPTs, became legal to use on public roads. They will not require MTBL insurance. This table, which was adapted from a handy guide issued by the Department of Transport, may be a little hard to read at the back, but don't worry, it's included in your brochure for your perusal later. What does it mean for the MIBI, first, you may ask? PPTs form part of a category of devices called micromobility, which include e-scooters, e-bikes, e-cargo bikes, and e-mopeds. Subject to complying with power, weight, and speed limits, they will not require MTBL insurance. Like pedal bicycles, accidents involving PPTs are not covered by the MIBI Guarantee Fund. Claims involving micromobility devices prior to the 20th of May remain within the remit of the fund, subject to the claimant establishing negligence and causation in the usual way. And then from the 20th of May, high-powered micromobility devices that remain outside the agreed power, weight, and speed limits will also remain within the remit of the Guarantee Fund. Last year, we spoke about some potential exemptions and derogations permitted under the new Motor Insurance Directive, as some elements remain under the national competence. The Department of Transport have since clarified that they now have a narrower view of how they wish to rely on the permitted exemptions. In principle, or in essence rather, that the principles of the VNUC jurisprudence will apply. And similar to motor insurers who now must cover accidents in a non-public place, the MIB Guarantee Fund will now also respond to compensate victims of uninsured road traffic accidents, even if they occur in non-public places. Lastly, but certainly not least for the MIBI, in an expansion of our role in the insolvency arena, the MIBI, as the Minister just shared, has been nominated to be the new motor compensation body required under Articles 10A and 25A of the Directive, and Aisling will update you on this in a few minutes. Turning now to a topic very close to my heart, fighting fraudsters. We continue to deploy and refine our fighting fraud strategy. Our fraud manager, Ken McKinley, and the whole MIBI team work in partnership with the claims handlers in our 5 MIBI handling offices and their special investigation units, and are ably supported by our accident investigators and our legal panel. We must continue to carefully assess and provide payments for legitimate claims quickly and fairly. People who make a real and truthful claim will not have any problem receiving the compensation that they are due. But when it comes to claims that are not backed by sufficient evidence, or which are grossly exaggerated or simply fictitious, our zero-tolerance approach will continue. We're determined to weed out claims of this nature and are staunchly committed to making it as difficult as possible for fraudulent claims to succeed. Led by Ken, a former chair of the Anti-Fraud Forum and current chair of the Insurance-Linked User Forum, the MIBI continues to play our part here in working closely with the insurance industry. We also support the function with appropriate technology, and more on that later. Ken and the wider team have a large portfolio of suspicious claims that they are constantly reviewing. At any one time, approximately 1 in 8 of the claims notified to the MIBI are initially deemed suspicious. This currently represents 6.1% of our claims reserves, an improvement of 7.7% from this time last year, which is welcome. The Law Society reported in late 2023 that the IRB were seeing fewer very minor injury claims, and we believe that this is feeding into our numbers too. This is certainly a positive, but whilst the fraud position is improving, it's certainly not going away. Together with our handling office colleagues, we've spent more than 14,000 hours investigating suspicious claims, and since the beginning of 2020, the MIBI has assisted the Gardaí with 215 investigations leading to multiple prosecutions and convictions, and we thank our Garda partners for their support there. And we've had 515 claims discontinued, withdrawn, or dismissed since 2017. Technology can be a useful aid to complement the good work by claims handlers, and we use IBM's iBase and i2 Analyst software to help us. It generates around 600 alerts per annum for further investigation, and over the last 5 years, 138 suspicious claims with 277 claimants were identified by i2, and these claims had combined reserves of over €5 million. Our next initiative in the MIBI is introducing a Special Investigation Dashboard, SID, into Presto, our core claims system. Sid and Ken, a match made in heaven. SID will provide a one-stop shop to support our fraud manager in tracking referrals and savings, and will assist in the overall monitoring of suspicious claims submitted to the MIBI. We're already beginning to deploy it, and we expect that it will be fully live, including the reporting modules, by the first quarter. All of this activity has led to fraud savings of over €31 million since we established our anti-fraud function in 2017, a figure we're very proud of. Now, turning again to Europe. As many of you will be aware, the MIB has several important international roles as European Union Motor Insurance Directive Compensation Body and Information Centre for Ireland, and we're also the UN Green Card Bureau for Ireland. These systems are supported by the COB in Brussels. The mission of the COB is to facilitate the free movement of cross-border road traffic and offers protection to victims of cross-border road traffic accidents by facilitating compensation benefits. The MIBR members and strong contributors were represented on their supervisory board and several of their committees. The number of claims handled and victims supported every year by COB members is phenomenal. Over 375,000 victims are held every year. That's more than 1,000 every day. The MIBI are proud to play our part in keeping Europe moving and protecting victims. It's a notable anniversary for the COB this year. We're celebrating our Diamond Jubilee. Eurovision-style videos were produced all across Europe for social media to help raise awareness of the important role of the COB. And some of the Irish team here are shown in a still from the video. We, of course, got 12 points for our efforts. The COB continues to evolve to meet the requirements of members and victims. This year, a new working group on connected and automated vehicles has been formed. It's chaired by Nick Robbins, the Chief Technical Officer of the MIB UK, and we're delighted to have Nick here with us today. The MIBI are also on the working group, and we will have Peter Davies and Garrett Davies from Thales with us later, who will share their expert insights on this topic. I'll only spend a moment on the figures, but you may find it interesting to see the change in cross-border claims over time. Our visiting motorist claims, represented by that light green line, are accidents caused by foreign registered vehicles here in Ireland, and they peaked in the early 2000s. This spike was caused by a large number of vehicles being driven here from the then EU accession states. Happily, these then fell as these visitors stayed, became part of our community, acquiring Irish registered vehicles and insurance. Accident abroad claims caused by Irish registered vehicles in other countries, the blue line, if you exclude the COVID years, have remained fairly constant. The movements in the compensation body claims, the bottom line in the graph, are a little harder to see, but protection of visitor claims were introduced under the 4th EU directive and allow EU citizens that have a road traffic accident in another EU country to claim compensation from the MIBI when they return home to Ireland. CB claims have dropped dramatically from around 100 a year in the late 2010s to only 10 last year. This is an unfortunate consequence of Brexit, as our citizens can no longer avail of POV protection for accidents in the UK. Instead, they must pursue their claims here in the UK courts. The MIBI are also the Information Centre for Ireland. In this role, we help accident victims establish the insurance position of a vehicle once they supply us with the registration plate of the offending vehicle. In September of last year, we began using customer thermometer to obtain feedback on our Information Centre inquiries. This measures customer feedback on this important service and is helping us to improve our customer service here at the MIBI. You'll note we currently have an exceptional Net Promoter Score of 83%, which is a credit to our in-house claims team. Turning to diversity, equity, and inclusion. We are a diverse and progressive company with 40% female directors, well ahead of the 30% club target. And in 2021, we began our journey with the Irish Centre for Diversity. In 2022, we were accredited with the D&I Silver Award in recognition of our commitment to diversity and inclusion in the workplace. This year, we've achieved re-accreditation of the Silver Award with an exceptional overall score of 91.7%. This is 2% higher than our 2022 score. It's also 14% higher than the national benchmark and 10% higher than the overall industry score. In keeping with the theme of D&I, in September 2023, as the Minister mentioned in his speech, MIBI became a signatory to Ireland's Women in Finance Charter. I believe that this strategy to encourage and increase female participation in the finance industry will make our sector stronger, because more diversity means better decision making. Two of our D&I committee members, Carmel O'Doherty and Kim Dempsey, are pictured here with Minister Richmond at the recent launch of the Women in Finance report. Some of our significant D&I days at MIBI this year included our celebration of International Women's Day in March, with our independent non-executive director, Katrina Summers, who shared her journey through the world of insurance, and IBEX National Workplace Wellness Day in April, where we took pause for thought with the Healthy Lifestyle Workshop. We also had a tough loss in August. Our HR manager, Mairead Mulligan, passed away suddenly. Mairead was a key member of our D&I committee, and as pictured here at our Pride event, dressed in white in the heart of the action, as she invariably was. And we miss our good friend and colleague, Mairead. Finally, I'll provide a short update on the other key projects that we've been working on. We remain very excited about the Irish Motor Insurance Database. This game changer should, with the support of the Gardaí and our members, have a significant impact on the scourge of uninsured driving. My colleague Paddy Slattery and our guest speaker from Garda Síochána, Assistant Commissioner for Roads Police and Community Engagement, Paula Hillman, will bring us more on this important initiative later. As well as the big public-facing projects of IMED and the new motor insurance insolvency body, we've also been working way behind the scenes on a journey of modernisation to enhance the resilience and security of our systems, as well as developing our reporting capabilities to deliver data-driven decisions. We successfully migrated our core claims and payment system Presto from on-premises servers that were potentially vulnerable to a single point of failure into the cloud. We also moved Click, our main reporting tool, and our telephone system into the cloud. They were smooth migrations, and it was a credit to the team for the big effort by all concerned and the excellent outcome. We also have a new cloud-based accounting software system in place, as our old one was approaching end of life. The finance people will know in the audience that this is not an easy task, and it was another great job by the team. Topically, the MIBI are taking steps to pilot the use of artificial intelligence in our organization. We've developed an initial policy and have a small team using Microsoft Copilot to determine the value AI can add to the MIBI and the reliability of AI assistant documents and research. We've had some promising early results. Next year, we plan to undertake a proof of value project with a test set of Presto documents to consider the potential of carefully integrating AI with Presto in the finance, fraud, recovery, and claims areas. We will continue to work to innovate and move the MIBI forward whilst keeping our data secure. On that note, it's my pleasure to invite Aisling Connolly, our Head of Finance and Risk, to continue the strategic update.
Thank you, David. Good morning, everyone. And today I'm delighted to give you an overview of MIBI's key financial information and provide an update on our progress as in our new role as the Irish Motor Compensation Body. I hope the Minister didn't steal all my lines. Let's begin with our Guarantee Fund notifications. The 8-month activity is stable year on year, with the Guarantee Fund notifications at 1,350. Settlements have seen an 8% increase, up from 1,573 to 1,705 in August 2024. That increase in settlements has driven the 1% decrease in unsettled claim stock. And you can see here we had 2,796 open claims at the end of August. Turning now to the Green Card cross-border claims. Visiting motorist notifications, where MIBI are ultimately reimbursed by the Farm Bureau for accident caused by foreign registered vehicles, have increased by 22% during the first 8 months of 2024. The accident abroad notifications are effectively level when compared with the 8 months in 2023. If the vehicles are uninsured, the MIBI or our members are responsible for reimbursing the Foreign Bureau who have compensated the victims of accident abroad claims. Members' levies finance our claims. They are based on actuarial forecast and from the previous July and are approved by the board. For 2024, MIBI were authorised to call 74.9 million from our members. As illustrated here, the levy decreased from its high in 2019 of 85.4 million. This is mainly due to the decrease in notifications that we saw throughout the COVID years, and they are impacting the levy now. To mitigate sudden financial needs due to unexpected large losses, we maintain a claim contingency fund to cater for a 1 in 20-year event. The fund is reviewed annually, and if there are excess funds in the contingency fund, they are refunded to members. As illustrated by the orange bars in the graph, the contingency fund refunds have varied from 22.8 million in 2021 to our most recent refund of 4.1 million. The green bars in this graph show the projected levy through from 2025 to 2027, and it ranges from 73.7 million to 79.7. The reason for the increase in the projected levy in 2027 is that our accident years 2024 and beyond are expected to have higher ultimate claims than those in 2021 and 2022. It should be noted here that the expected benefits that you'll hear about from IMID later are not in these figures, as our actuaries feel it's too early to take it into account. This graph shows the breakdown of our gross claims payments for the first 6 months of 2024. It is split between attritional claims payments, that is the payments on claims with an incurred value below 1 million, and large claims payments, which are payments with an incurred value in excess of 1 million. The attritional claims payments are slightly lower than the comparative period, but the large claims payments are 78% higher at 11.1 million. As we all know, large losses are inherently unpredictable, and therefore the contingency fund I mentioned previously plays a really important role in smoothing large loss volatility. Turning out to our balance sheet impact, we have 432 million in gross claims reserves. The increase of 25 million on the prior year is an increase of 19 million in IBNR and 6 million in case estimates. Finally, in respect to the financial activity, one really interesting initiative MIBI has introduced is projecting how many claims payments will be made in a given year. We are leveraging the additional functionality since moving our data analytics tool Click to the cloud. It uses machine learning to make predictions about future outcomes based on current and historical data. The accuracy of this model is astonishing, and at the end of August, the model had predicted we would have paid out 2,597 payments, and we'd actually paid out 2,612, a difference of only 0.6%. The benefit here is that it allows MIBI to make data-driven decisions, improve our operational efficiencies, and aid with resource planning. Turning to our insolvency roles. We have 2 roles in insolvency: administering the Motor Insurance Insolvency Compensation Fund, MISIF, and acting as the Irish motor compensation body under the 6th Motor Insurance Directive. In terms of MISIF, members are required to submit a declaration of all motor gross written premium certified by an auditor, together with their contribution to the MIBI by the 30th of June each year. At 31 December 2023, the fair value of the MISIF investments was 153 million. We received 39.5 million in contributions this year, and at the end of August, the fund had 193 million in it. This graph is our best estimate as how the fund is expected to grow, and it's based on a couple of assumptions, such as no new insurance insolvencies, a stable investment environment, and a stable motor insurance market. The MISIF contribution rate is reviewed annually by the Minister, and it can vary between 0 and 3%, depending on a couple of factors such as the amount held in the fund and the likelihood of a call on the fund. Last year, the Minister advised that the rate would drop to 1% on the 1st of January 2024, and this will reduce the amounts due from our members payable in June 2025. Even with that contribution rate dropping from 2% to 1%, we anticipate that the fund will exceed the 200 million threshold in 2025. And on that basis, and as the Minister announced earlier, in the budget this week, they announced we can cease collecting contributions on GWP in 2025 that would have been payable in June 2026. This is really welcome news for both members and consumers alike, and of course, less work for me. As David mentioned earlier, MIBI have been asked to be the motor compensation body for Ireland as required under Articles 10A and 25A of the Motor Insurance Directive. The big change here with the introduction of these articles is the move away from a host-based system to a home-based system. The Irish Motor Compensation Body will be established in law under the Motor Insurers Insolvency Compensation Bill 2024. You may recall when I spoke to you about this topic last year, we were hopeful the bill would be passed into law by the transposition date of the 23rd of December 2023. Unfortunately, there were some unexpected delays. However, we were almost there, with the bill having passed all stages of the Dáil and the Seanad on Wednesday this week, and we expect the President to sign it into law in the coming days. The bill aims to provide important enhancements for the protection of motor insurance policyholders. It will also protect customers and injured parties when a motor insurer becomes insolvent. It provides for a streamlined compensation process and prescribed timelines for the payment of compensation. It establishes that the home member state is the ultimate paymaster and a one-stop shop for motor victims. The bill outlines funding for claimants and IMCB costs and expenses. It precludes provisions for reimbursements, recoveries and subrogation, and it also mandates information exchange and cooperation between a number of stakeholders. These provisions aim to ensure a comprehensive and efficient process for handling motor insurance insolvencies. Turning to European matters, I am happy to share that all Member States have now signed the COB agreements between the new insolvency bodies across Europe. 3 countries, Latvia, Poland and Ireland, signed the agreement with conditional suspensive clauses, as at that time their national legislation was not sufficiently advanced. The agreements came into force on the 10th of July, and the European Commission have agreed to forego delegated acts and accept the COB agreements. The benefit here is that agreements are now within the control of the COB, and if any disputes arise, they can be solved internally. Separately, Ireland, along with 15 other member states, missed the transposition deadline, and as a result, the European Commission commenced enforcement proceedings against these countries. Now that our legislation has passed, though, or it's about to pass, we believe those enforcement proceedings should fall away. As you can imagine, there's been a huge amount of preparatory work taking place within the MIBI to get ready for the new role. A steering committee has been set up, along with working groups within the finance and claims areas, to go through the operational considerations. One of the key first areas for us to understand would be how many new claim types would be required. You'll be glad to hear there's only 9 to contend with. The claims types are primarily derived by 2 factors: the place where the accident occurred and the place where the insolvent insurance entity is regulated, be that Ireland or another foreign jurisdiction, as that determines who ultimately will pay for the claim. Along with defining the new claim types, MIBI have been working on developing the insolvency plan that will be invoked if a qualifying insolvency occurs. We all hope that won't be needed. However, the main areas in the plan are how we will engage with the liquidator if there were to be an insolvency, how would we assess the size and complexity of the liquidation, How would we get the data from the liquidator system into MIBI's core claims system? The payments process for looking after the payment of claims for victims and reimbursing our handling offices, and catering for the State Claims Agency's quality assurance requirements that are set out within the bill. Again, time will not permit me to go through all these areas in detail, but we will focus on a few of the most pertinent ones. In terms of payment flows to the handling office, there are two payment streams. This payment level is a working assumption at 250,000, but we'll focus on that, and it's yet to be agreed with our colleagues in the Department of Finance. But based on the two payment streams, we have payments under 250,000, and for those payments, the handling offices will make payment from its own funds, like it does for the MIBI claims as usual, seek reimbursement from us as normal, but the main difference here is that support documentation will be required for all amounts paid out. For payments greater than that threshold of, say, 250,000, excluding where payments have a court order or an IRB order, there is an additional layer of governance. The handling office will have to make a conditional offer to the claimant, and that is subject to State Claims Agency approval. The SCA review will focus on a conditional offer report from the handling office to assess the claim eligibility. Once approval has been given from the State Claims Agency, the handling office can then proceed with the normal payment process. In terms of the legislation, it provides that the State Claims Agency has a number of governance obligations to fulfil. Section 16 provides that the SCA must complete an annual ex post audit, and that ex post audit will be on a sample basis of claims under that threshold. Section 17 provides an ex ante review or pre-approval of payments, and that's the one I referred to on the previous slide. Section 18 provides for the SCA to report on both audits in Section 17 and Section 16, and a review of the governance in the Act, which will take place 24 months after the first insolvency. Operational details of how the audits will be conducted are contained within a Memorandum of Understanding between the SCA and the IMCB, and it is nearing its conclusion. To underpin our new role and processes, there is a requirement to invest in IT. A detailed specification document has been developed, and with the support of our board and a discovery project has been undertaken to assess the costs and timescales for development. So you may ask how the IMCB is to be financed to pay for the claims and administration costs associated with our new role. The bill provides that MIBI, acting as the IMCB, will enter into an agreement with the Department of Finance as to exactly what costs and expenses are recoverable. We have shared a position paper with our colleagues in the Department of Finance, and there is broad informal consensus. But as always, the devil will be in the detail of that agreement, and we continue to work with our colleagues in the Department of Finance to finalise it. So as you can see, and to coin a phrase that the Minister took from me earlier, there's a lot done with more to do, and we're keeping our fingers crossed there'll be no insolvencies in the meantime. Thank you, everyone.